Okay, hello traders. Good morning and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, November 12th. Good morning to everyone in the room. Hey, Jamie, Jay, Marchin, Pete. We're just getting the release of core inflation rate here in the US coming in at 1.2%, missing expectations of 1.3 just by a hair. Core inflation 1.6 versus 1.8. Again, slightly weaker than expected. I don't think much of a surprise there. But a print that came out just now nonetheless. Good to be with you guys this morning. Hey, good morning to you as well. As we wrap up the week, it's been an interesting move. Some of the dollar crosses, which seemed like they were a little bit exhaustive, kind of taking another push here today. But on the menu, we'll take DXY, Euro, Dollar Swiss, Aussie Dollar, Kiwi Dollar, SPX, Sterling, Dollar CAD, Peso, and we'll round it out with some gold. Any other questions or trade setups, guys? As always, feel free to throw them on the message board at any time. I am under a little bit of a time constraint this morning, so I'm going to try to keep this at a decent pace. Let's jump right in. Here's first thing. Obviously, DXY. I gave you guys an update on the majors last night. Really nice moves. Okay, I'm not going to bore you with going over the intricacies of the weekly chart, but again, just insane adherence to the technicals and just really clean price action, guys. Here's that same trend line off the 2011 lows, major support, really nice bounce, right? So the whole focus of the week has been what we do around here, still holding, right? Still holding. Daily chart, really nice drop. Again, 92.28 was the level. Outside day reversal off the lows, shifted the focus higher. Here's the first level we're looking for, 92.96. The second level was 93.21. We just missed that here before this pullback. Again, intraday, I'm kind of working with this slope. Here's what I showed you guys last night. I was looking for support along that lower parallel. It held, but what is that? It's not the cleanest move. If we take this support slope, guys, it's really near term. I hate doing this too granularly, but just for argument's sake, the gradient actually does fit a little bit better and keep us on par with that move. The biggest region of resistance I would love to see is 93.45, 93.47, 618 retracement off the high, 100% extension off the low. Beautiful confluence region, just higher. Okay, so looking for support along that parallel or possible channel. At the end of the day, I want to see an exhaustion low ahead of 92.47, which was that low that we made into the close of October. And again, topside breach, 93.45, 93.47 is the big zone. Beyond that, objective monthly open converges on downslope resistance. So pretty clean levels. You're still at one of those regions where you could see a little bit of a kickback here in US trade today. Ultimately, we do want to see an exhaustion low. 92.28 was a big support zone. It's also the low day close of the year, which actually comes in right in line with 92.30. Just a really nice area for this thing to find a little bit more of an exhaustion recovery. Questions on DXY. So where does that leave us on Euro? Well, for Euro, the advance came into a beautiful spot. We talked about this one as well. The high day close, 1661. Excuse me, 19. What was that? No, 1961. I'm sorry, 1911. The high day close. Look at the wrong level, which is right here. Start of the week again. Wasn't an outside day reversal. A lot of the crosses made it, and we covered this on Tuesday. Euro didn't, but it did give us the move nonetheless. So right back into that Thursday low, right? That was 117.95, bobble, break. What is this here? I didn't want to see strength through the median line. We're getting it now. End of the week, you have some data on tap, right? Here's what it looked like last night. So I still have 1855 as sort of my key resistance. Bearish invalidations, 1889. That's the objective weekly open. So even if we do push a little bit higher here today in US trade, we're basically looking for exhaustion ahead of this zone. Downside targets unchanged, 1723, 17, and 1667's a full 1618 off the highs there. So you know, kind of the stretch, recovery. Want to see this start to exhaust here today for the next leg lower, if this is going to work. Questions on euro? All right, so we're looking for re-entries on that. Dollar Swiss, what a wicked week for dollar Swiss. So you guys know for dollar Swiss, I've been talking to you about 90, 80, 80, 90 for a while, or 90, 80, 90, 90 for a while. This region right here, 38.2 from the entire 2011 advance, 618 from the entire 2015 advance. We've been, I mean, you could see pivots on this on a closed basis on both ends: resistance, breakthrough, acceleration, support, breakthrough, acceleration. And we've been pivoting for the last like 5 weeks, been crazy. So look, we're at slope resistance. We're at the former yearly opening range lows from that March debacle. We're at the 2018 lows. Okay, it's all right here. So if this is a range, which you could argue this is just one big old whopper of a range, we're at the upper parallels. We're at the upper bounds. Here's what the daily chart looks like. And this is what I showed you guys last night. The 618 retracement of decline gives you 91.94. Okay, the monthly range highs are just a bit higher. Downslope resistance, upslope resistance. It all dwells right here. Okay, so basically you're looking for something topping 92. You're looking for a close, you know, ideally 92.20s gets you up there. And that would be a validated monthly range breakout. Very, very simple. Here's your monthly open. You slam into a low. Here, slam into a high. Here's the monthly opening range is set. It's also right set in line pretty much with those late October highs and the September opening range high, which is right here. Make it through here. I think you're on for 92.86, which is again the high day close from here. Slope resistance off the yearly highs. And if this pitchfork is in play, that upper parallel converges right there as well. All right, so it's about, you know, 100 pip run, maybe a little less. This is the area you need to look for. Resistance on dollar Swiss, near-term support. Key support is going to be right back at 890.80, 90.90, right back at that same level. Here's what the intraday chart looks like. And here's what it looked like last night. Okay, so the region of resistance that we're talking about initially is still 91.94, 92.07. We were trading just below that yesterday. Support at the median line, bullish invalidation at 90.90, 90.80. Here's the pullback. Again, maybe another strike into the US Open, but you're essentially looking for exhaustion into that parallel. Also, now that we've sort of made that turn, just to give ourselves some guidance on the way down, see if there's any Fibonacci considerations to take into account. Okay, just for reference to show you, if we were to wash out into US trade today, intraday, right, even into 91, 90.86 would be 50 of just the weekly range, but you get the picture. We're looking for the downside to exhaust ahead of this region, ideally, for the next thrust higher. Breach above 92 gets you 92.39. And again, 92.86, 92.96, that's the big zone. It's the big zone. There's a lot up there. Questions on dollar Swiss. Talk about outside day reversals. This thing was a beastly outside day reversal earlier in the week. Right off fresh lows for the year. This is the first level to resistance. So we're going to get some kickback. This might be the region, but ultimately that's the pivot we need for the next leg up in dollar Swiss. You see the theme here, guys, of all of this is returning dollar strength. And I know I focus on the technicals. Jamie focuses on the technical. We're traders, right? We're not fundamental analysts or journalists, but a lot of people are saying, like, what does that How is that justification? How can you justify a bullish call on the dollar, especially with everything that's going on? You got the Fed printing money, you've got, all this nonsense. Now the COVID vaccine and all this, and everyone's throwing all this stuff. Focus on the metrics and focus on the numbers, guys. At the end of the day, um, we're as far as the economy is concerned, yeah, the headlines are concerning, but the market's doing all right till now. And now we're coming at some regions where the spillover is looking kind of precarious. So this whole market's just going to continue to rally, dollars going to continue to tank. We've been against that for a while, and we're starting to see signs of that now. So before I jump into SPX, I just want to show you, here's Aussie dollar and Kiwi dollar. Well, let me just jump into SPX real quick first. I want to just show you this. Is in the same update. So here's what the SPX looked like back on the 10th. The big zone of resistance that we talked about in the webinar on Monday, and then again here on Tuesday, was 36.61. It was a 1618 extension and the advance off the low. You had multiple upslope resistance in that zone. You slammed lower right off it. Here's SPX right now. Okay, there's that zone. So basic trend line off the yearly highs. Here's your February high. Your high from September was right there in red. The near-term slope, which is getting very ugly at this point, but nonetheless, here was the pitchfork we've been following off the lows. So clean, failure, pullback, and we were sitting on this slope for a while. And I even said something last night, it's getting really messy here. Ideally, you see rallies hold the close highs of the year, again, near 35.79 for the move, or at least probe of that 38 to near 35.06. Here's that 35.79. It held, not convincingly. And here we are just ranging just below. If this was a break of uptrend support, man, that's not the break I want to see. All right. If the break is legit, I want to see this thing maybe come back, test its resistance, then give us the move. Like this wander, lateral move out of slope, never good. Never good. And always I shouldn't say always, nothing in trading is always, but often a foretell of some wicked price action to come. So I'm very, very cautious. Pistol to my head, I do think we get further weakness. How it pans out from here, this slope, just losing efficacy. And I'm not going to continue to sit there and press it. You could look at something like this using more of a purist trend line just off the low. Well, what's that? What are you going to get long here? So it's tough. SPX is tough. I'll grant you that. Again, my humble opinion is that if you get a spike higher, it fails and you look for a test of 35 still. I don't want to get too granular here, but just some reference for you fib guys out there. We basically held the 38.2. Like I said, I don't really like 50s as true fib levels, but if you were to spike higher, look where the 618 comes in. All right, so like 36.12. So you can envision a scenario. This is an hourly chart, by the way, guys. It's a little bit tighter. So you can envision a scenario where, you buckle back above 35.80. You make a run towards 36.12. Everyone gets super bullish to the hilt, and then all of a sudden this thing just tacks 35. One interpretation. I'm cautious below 36.12 still, or the 36 handle in general, but 36.12, that 618 specifically, of just the near-term decline. Does that make sense, guys? Does that help? Okay. So that is SPX number 4. Kind of watch this closely here. Jay says yes, thanks. You're more than welcome, Jay. It's very precarious here. And just to put things on par again on the daily chart, it's been quite a stretch. Even like a 5% washout from here probably would rip people's brains off, but wouldn't be that crazy. Pete K says big help. Right on, Pete. Thanks, man. It's again not my levels, the market's levels. I'm just helping you find them, but I just think that there's way too much complacency on both ends, which is when I start to tiptoe. Right, the bulls are firmly bullish, and there's not many bears out there, but the ones that are They're not too loud. And that's when you want to go boldly again. So that's SPX. So what does that mean for the risk sensitive pairs? So for like Aussie and Kiwi, I got both of those at resistance too. Okay. And that's where the whole picture starts to get kind of cleaner, right? Aussie dollar, what's the level of resistance we talked about for so long? Well, 73.28, 72.95, okay? It's going to be that swing high from 2019. It's going to be the swing low from May, or what was that? May of 2017. Oh, it's right here, May 2017. Huge pivot in price, major pivot zone. Trendline resistance extending off the highs from 2018. That's the same parallel of the 2011 slope. So here's your slope, a parallel off the 2018 high, caught the highs. That same slope converges, 73.29, 72.95 right now. That's exactly where we halted. You guys know where key support is, 70.16, 70.42. We've been talking about that literally for years. That was last year's open and this year's open. So the range is well defined. The levels are clear cut, and we are at resistance. So Aussie, in my opinion, was one of my favorite moves today, or favorite moves this week rather. We're still not getting much Momo behind it. Here's the daily chart. 786 retracement, a decline off the yearly highs, puts you in line with former channel support, turned resistance, 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 just higher. The high day close is 73.71. Holding. Now, it's not a convincing hold. It's not a convincing short, but it is resistance that's holding your term. Okay, so I'm kind of like, it's been frustrating because nothing's happened. You could have gotten a couple plays off this, but I mean, you're squeezing water from a rock here. It's like nothing happening, but the level is clean. So, you know, I've always been under the mindset, guys, that if you're in a position and the expected outcome doesn't happen, and this is actually my words, this is from a book, The Logical Trader by Mark Fisher, if you guys have time to read it. If the expected outcome doesn't happen within the perceived, I guess if the outcome, the favorite outcome isn't happening within the perceived respected time, the trade typically doesn't work. Now, that's a very dangerous word, and you can look at your trading experience and see many opportunities and many examples on both ends where that was not the case. But in a day like today, I kind of get ticked off, right? I'm waiting for this. It looked like a decent break. It was a nice stop. It was a tight stop. It's decent, you know, 72.56 is still kind of like holding, but I want that draw lower. The initial level we'd be looking for is just the basic median line. You know, it converged on the 38.2 earlier in the week. Now it kicks out a little bit higher, so like 72.20s, let's call it. 72.07 is going to be the 38.2, but you get the picture. Very critical resistance range. Critical resistance. This is a lot of thing that this is what happened last time we came here. We ripped right through and buckled right back below. Tried it again, failed again. Here we are. What happens? Well, all else held constant, heading into the start of Thursday trade, the weekly opening range is preserved. So if you're not involved here, take an objective view. You've got a clean weekly opening range right below critical daily resistance. Looking for reaction here in Aussie dollar. Questions? Respect a break above 73.29. We made an outside day reversal off of multi-week lows last week. An outside weekly reversal off multi-week lows into a multi-week high. If this breaks, I would expect the top side to really accelerate, which is why I think for me the trade was such a like a no-brainer. If you're wrong on this, we should know pretty quick. We should know pretty quick. Questions on Aussie? So Kiwi, similar scenario. I think Kiwi at this point has actually a better opportunity for fresh entries from here. My ideal level was 69.42. It's just a 2019 high. It's nothing fancy. We are at the 2019 high day close, if you take into account 68.90, which is where that January high came in. But just to give you a point in reference on where we are on the weekly chart, look, if this breakout is legit, again, there's a lot of room on the long side. So a little bit more precarious for me on Kiwi, which is why Aussie's been the one more I've been tracking. But from here, look at the daily chart. Some basic slope off the lows, support, parallel, right? Parallel, right? We're there right now. Let's just remove this one for argument's sake. We're there right now. That's the extreme, the high from September. Boom. 68.89. Again, like I just said, that's the high day close that I showed you on the daily chart or on the weekly daily chart. There we are. So, and again, it's been such a radical stretch, right? It's one of those trades where you don't want to be the guy trying to call the high. You never want to be the guy trying to catch a falling knife, right? We say it all the time. But if this is gonna find some failure, here's where you'd look for it. Rules of thumb: I don't try to short things when they're an overbought on daily position, right? It needs to be a really radical signal, like a super conviction level. A break into overbought, that's actually when the market might have the most run. So that's like me trying to short here in price, right? So I can't really do it. But if we were to recover back below, remember, it's always the break below 70 that's actually your short signal, not the break into overbought. Things can stay into overbought for a pretty lengthened period of time. So that's the reason and my caution and my precaution and my why I can't kind of just try to fade this move. Here's what it looks like on the intraday. All right. Obviously, new retracement needs to take into account that new high. Let me just shift that around a little bit. There we go. I bet you the 236 would actually be right. Nope. Here's what we've been tracking. Again, forget that sliding parallel. Focus on the main shift. There it is. 68.89 was the level that we were looking for. That's sort of our oops. You know? So from here, yeah, ideally you start to pump, fake, and then turn over lower. It would jive well with the dollar strength that we're kind of on the lookout for. It would jive well with just this extension move of all of these majors, especially the risk assets here that could turn over if we are correct on the interpretation with the SPX. So nice spot. Looking for some exhaustion, major near-term support, key support now gets really wrapped up into 67, 80 to 85, 67, 90. You got the weekly open, the 38.2, which was down here, now gets lifted with that high, right? So the 38.2 is there now. And then you even have the former swing high from back here in September. So really nice zone. That's the break, which if you get it, gives you the conviction reversal trade, in my humble opinion. Let alone a weekly opening range reversal in and of itself. It's just a really, really nice level. And where we are in slope, that's the conviction reversal, in my opinion. Till that happens, we're on the lookout for topside exhaustion. If you do try to take anything against the counter trend here and try to short this, it needs to be against the high, and don't fight it. A pop through, a close through higher, you're looking for that extended move back into 69.40s and above. Okay. Questions on Kiwi, both Kiwi and Aussie. I mean, just love them, but the levels are great. The Momo just really failing. I think this one, like I said, I'm liking the fact that you're getting stronger divergence here, right? If you're not in a position already, like Aussie's testing or trying to test the weekly range lows, right? Here's your weekly open. Kiwi isn't yet. And again, non-confirmation highs. Kiwi with a new high. Aussie didn't make a new high. Might be a nice signal for some exhaustion trades to come. Okay. All right, picking up the pace here. So that was number 4, number 5 on Aussie, number 6 on Kiwi. Number 7 is Sterling. Big, major, critical area of resistance. We are there, we are there, we are there. The level was 132.50. The objective yearly open into the 100% extension at 33.11. You have upslope resistance there. You have up channel resistance there. You're loaded up there. Here's Sterling right now. Really nice reaction. Clean play. Not much left to be said here. Let me take you real quick into Sterling on the weekly chart and just show you how critical this region is. So on the weekly chart, we highlighted 31.75 into 32.50. Again, the objective yearly open, the 618 retracement of the near-term decline off the high that we made just in August, the longer-term 618 of the 2018 decline. So it's loaded here. Weekly standpoint, you need to see a weekly close above to keep the long bias in play. And this is where our multi-time frame strategy is paramount, because on the intraday scale, if you were looking at this, a lot of people were thinking breakout, breakout. That's the key zone you were talking about for months, Mike, breakout, right? But we would need a weekly close above to confirm that. We didn't. We're not even gonna get a weekly close near that 2020 open, in fact. So that's cool, right? Daily chart looked like this. The daily chart was even more granular. There's that 100% extension, 33.11. There's that key region at the yearly open, at that long-term 618 retracement, 32.50, 32.45. On a daily close, again, you can't make this stuff up. Look what happened, right? Laterally, 32.50 sure, slope right there. And not just that, the intraday high was caught by that 100% extension on a reversal candle. Pretty convincing, right? So I thought Sterling was one of the cleanest moves this week, right? So here's the intraday picture. Even on the last advance into resistance, and here was our last update here in on the 9th. Into that last advance, really nice divergence. Price action with a higher high in price, higher high in price. Look at that. All below 70. Decent signals all around. And for those of you who still like to work with support triggers, you guys know I used to be really big on these back in the day, using momentum support triggers to give you that sort of signal, that confirmation, a visual graphic representation of a shift in momentum. That was there too, and that was a 3-point touch. So really nice moves. I'm loving it. I hate the fact that we're kind of fizzling out right here, but at the end of the day, sub 32.50, still looking for possible stretch lower. 30.92 is going to be a break of Friday's low. Okay, it's also going to be upslope support. It's also going to be the median line for this pitchfork that we've been in, pretty darn clean, right? Just one of the best setups, I think, this week. So let's see if we can get some follow through, all the while recognizing, obviously, we're still in the objective weekly opening range, guys. That Monday, Tuesday stretch is still where this thing is holding. And ultimately, we do need to see that break to really give us that conviction bias. Again, above 33.11, forget about it. It's a big breakout if that happens. Our expectation, our look here has been for the exhaustion against this key region. Okay, questions? We did get GDP growth rate today out of Eurozone, out of the UK. Dismal numbers, negative 9.6% was the year-on-year growth rate. GDP year-on-year came in at negative 8.4, which is right in line with expectations. 3-month average is right around 15%. Just a little bit weaker than expectations there too. That said, I don't really care. From a trading standpoint, we just came off resistance. The whole focus has to be against or about this pivot zone. Anything northbound of 33.11, you're on to the races again. Okay, number 7. Number 8, dollar CAD Haven't been as excited in this one, albeit we were right on. I hope some of you took advantage of this. I missed this advance. It's been a slow grinder. So on the initial turn here, I was looking for another pullback to try to even fade something against that low, but we didn't even get it. And it's been kind of a runaway from me. So here's the first target, 31.05. It's a 38.2 of the retracement from the decline off the highs. Here's what dollar CAD looked like right into the start. He was on the 9th on Monday night. Really nice dip right into that lower parallel. That was right there, the signal. I mean, as soon as we buckled and closed this session back above, let me just take you a quick reminder. This was uh, a big support zone for us on the daily chart, right? Objective yearly open on the weekly. I'm sorry to jump around so quick. On the weekly, it's ugly as hell, right? Um, it's just your objective yearly low. So like I guess that's holding at this point. So I don't really like the weekly chart here to give us, major guidance, which is why I didn't get involved and I missed this one. Like I always tell you, if I don't have clearance, no clearance on the daily chart, then you're out. I don't really want to mess with it. But here's how it looked right on that Monday failure and pullback. Yearly open support 29.75. Here's near-term resistance if this slope is correct. The other thing is this looked like a consolidation break, right? So I didn't want to try to fade that. That was only the third day of the decline after that break. A measured move of this, guys, takes you down into like 20, 26, right? So what the hell am I going to do trying to buy on this break? It was still the decent move. Nonetheless, guys, I digress. We're here. If this pitchfork is in play, this is your first downslope resistance, consolidation, support, just higher. So watch out. Watch out. The recovery, the rebound was awesome. I just think that rebounds at our first initial major target right now, and that's 31.04 right here. Okay, obviously I was highlighting a little bit earlier here on the 9th because we were, that slope was just higher. That slope now converges basically right on the 38 too. So again, pistol to your head, Boutros. I do think we move higher. From here, though, a pullback, you're looking at weekly open support at 30.37. That's still sort of where I'd love to see hold support. Bullish inval or like the resumptive move still needs to be down here. Okay, so that doesn't change, unfortunately. That 20 pip range of 29.75 and 29.95 is still kind of what I want to see hold if we are moving lower. But this is your first major pivot. If we break above this, it would suggest a more important low is registered here. And you'd be off to the races. Bring down the 50 here just for guidance. It's like 31.60 and up into 32.13. Questions on dollar CAD? Last but not least, from the number 9, the FX crosses. Here's peso. So for the peso trade, it's been really lackluster and boring. The only thing I wanted to highlight on peso this week was this big support zone. And I thought it was worth highlighting right into the open of the week. Here's how it looked on Sunday. The two levels I told you guys to look for was that 786 and just lower was the slope. So 20.0752, and then I highlighted the slope just a little bit lower. So like right down here. So we were looking for that breakdown to fail into this zone and a nice possible opportunity for a rebound play off there. Anyway, here's how it happened. We opened the week. It played out just as we suspected. We went to that slope, broke, took out the 2019 high at 25.56 or 25.61 there, and then tanked into that 786, which did hold. So here's the rebound. Here's your weekly open. I do think you get the broader play and recovery from here. The only thing I would want to tack on, guys, is just a quick retracement off that near-term range, just off the last 2 weeks. Gives you a 38.2 just below that September low. So something like this. shifts to your sort of more critical resistance to right there. Possible scenario play there. And that would actually put that 50 right in line with like tomorrow or the day after. But you get the picture. So I want to see 2025 61 hold, that 2019 high. I want to see that hold, period. If we break below that, I'm not going to sit here and try to fight a multi-month downtrend. Your risk is lower. From here, the whole focus on what we get, what kind of reaction, what kind of pivot we get on a rally towards 2077.55. Questions? The peso craze continues. Still clean levels. Again, the momentum starting to get a little tired on these trades. Aussie, Kiwi, peso, but the levels are just magnificent. So last but not least, here's gold. And then I got to run, guys. But the trade, I haven't written about it in the last couple of days because honestly, guys, I don't really want to touch it. Like myself from a trading standpoint. Pistol to my head, I'm bearish. You guys know that. Once this breakout happened, we shifted our tone. We said, that's big. That's a multi-month downtrend breakout. It was an accelerated move. You had the election, all this nonsense happening. We hadn't gotten, this is the vaccine news, right, early in the week. So it looked like a legit breakout. This changed things, okay, guys? This one single day changed things. So yeah, I don't really know how to attack this right now, but if you put a pistol to my head, I do think we go for those final targets that we were talking about on the previous decline that never made it, namely 1837, which is again just a basic 38.2 of the yearly range. We never made it. It failed back ahead of it here. Here was the rip. Here was what looked like a breakout, legit and clean, and a break of the previous month's opening range highs. Everything was there. Momentum couldn't break 60, and price failed ahead of the upper parallel. For me, these are all hallmark signals that this thing's got a deeper cut in it. Okay, so XAU on the weekly chart is already poised to mark an outside weekly reversal after a breakout. That's false break written all over it, right? So watch this week's close. Again here, a lot of this, I hate to say it because I tell you guys not to pay attention or not to put too much weight on it, but a lot of this is going to be headline driven as well, okay? Whether it's going to be vaccine news, whether the transition or lack thereof gets messy with the presidency, or whether actual evidence is produced and the vote count is once again questioned. Whatever the catalyst can be, right? I can write a book, you can scroll the news and come up with a whole bunch of stories. From a trading standpoint, if it does mark the outside weekly reversal, which means we have to close below last week's open, in my mind, that's just all the more evidence of this being a false break scenario, and we got to look for 1837. All right. One other thing, let's be not just be reactive but proactive. New slope using some new major monthly highs. Figures something like this. Deadens the slope a little bit, but highlights not only 1837, but on a down break here, if we do break that multi-month low, the 100's 1800. That was our secondary target. So look, I don't want to get super I don't want to get super bearish, crazy here, gold in this market environment, but I'd be looking for resistance. I'd be looking for failure ahead of 1920s on recoveries, and a break lower. You guys know the levels, but here's 1920. Okay, it's kind of messy here. It's not just the 6.8. That's just added, a little cream on the crop there, but it's the 2011 swing high, decent pivot in price. And on the daily chart, even if we were to rally that high, I still think the risk would be for that dump. So I'll leave it at that with gold. Any other questions or trade setups, guys? All right, I do have to run. I'll see you guys on Monday, as always, on the Daily FX webinar, and right back here, Kiwi CAD, and if you're able, Aussie CAD. If not, I'll understand. I do have to run, Marcin, but Kiwi CAD, did you ask about that earlier in the week? You always get me interested in these weird pairs. Breakout, breakout, breakout and a half, breakout and 3/4. Really good breakout. I need to rejig the levels here for you, but if you are holding longs, there is that 91 that 91 target that we were talking about, or 90.09, excuse me, target 90.10 target that we were talking about, which is right here. Also the highs for the year. Yeah, man, it's an awesome breakout, but I wouldn't chase it. I wouldn't chase it. If you're long from anything sub 89.20, I would have a little off the table, stops to break even or better, and look for a stretch higher. But at the end of the day, where Kiwi's trading and where CAD's trading actually is a recipe for this to give you some sort of pullback from these levels. I don't want to be the one calling that. We're still in overbought condition, but you can see how wicked these crosses are, where the overbought condition is very minor and doesn't last too long. That being said, it's been quite a decent stretch. You're on the back of you haven't seen one down day this month yet since the open. So, I'd be kind of bailing on that one from a trading standpoint. All right, guys, best of luck trading for the rest of the week. Stay nimble. I will have an awesome weekend, and I will see you all on Monday. Cheers.